Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning, happy Monday. Halfway through July, 7/18. Got earnings out this morning from Goldman and B of A. Goldman, kind of a little bit like we talked about. So once Citi put up those good results on trading, that was kind of your cue that Goldman would probably be playing the same game, except playing it even better. They're looking up almost 4% this morning. B of A, not the most inspiring quarter, and I haven't dug into it yet, but that stock was down, now turned around and up a couple percent, so that's interesting. We talked about it a couple weeks ago that maybe the banks will be a buy on the news type of an event, and so far that is what's happening. We'll see what kind of legs it's got. Speaking of which, we are looking up this morning on the futures market. The rally, not totally unexpected. Big strong day Friday. Probably be another one today. People are just so positioned cautiously, so bearish, so much cash, so not involved. Everybody gets to one side of the ship has to kind of right itself. I think that's what you're looking at. I'm not sure. I can't call it all clear by any means, but it is interesting. And if you do combine what we're seeing on the equity land to the dollar is pulling back now for the second day in a row. That's giving a lift broadly to commodities. You've got oil, natural gas, gold, copper, all looking up this morning. Freeport-McMoRan looking up 4%. And these things are starting to screen really well. For those of you that are familiar with DeMark and those studies, gold GLD screening really well on a DeMark. Freeport-McMoRan looking to go up about 4% this morning on the strength. We are uninvolved there. We do own the GDXJ, the junior gold miners, as a play on gold, just thinking that the downside's overdone near term. That's looking up 1.3% this morning. But look for that commodity comeback. Could have a little bit of legs to it. It's we'll see, especially if the dollar keeps on weakening relative. I'm not sure how much it can go lower versus like the euro, for example. It's just in so much worse shape than we are. But nevertheless, it's compelling right now, and we could get a little bit of a lift, could get a decent trade out of a lot of these commodity names. And if we, also Goldman this morning upgraded Chesapeake CHK. That's one of the E&P names we've talked about. We were able to scoop some of that up last week in the high 70s, looking up 3.5% this morning, 86 and change. We'll take that. Still not chasing the semis. But like in the commodity space right here, don't mind putting some to work on this oversold condition and what looks to be a pretty decent balance, and maybe that runs through the week. Triple Qs too. Keep an eye on the triple Qs. We've talked about those guys breaking out of their downtrend, holding that. It's done so far. It's good. This morning it'll gap up above its 50-day moving average by about a point. Let's look for it to hold that. That would be pretty compelling. S&P 500, it's 50 days right at 39.30, I believe. So we could see that today. That would be a pretty good move, but could see it. It's possible. The triple Qs, though, are going to gap above that 50-day. Something to definitely keep an eye on. All right, have an awesome day out there, and let's see if we can put a good week together. Okay.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.